Welcome back, everyone. In this lesson, we're going to discuss trading systems. Now, I know you've heard that word thrown around a lot throughout the curriculum, but today's the day you finally get to take that deep dive and take your trading to the next level. So let's jump right in. Well, first, you're probably wondering, what is a trading system? In short, a trading system is a complete framework for engaging with financial markets. This includes specifics for both risk and position sizing. Your system will tell you on any particular trade how much you should be risking, as well as how you go about sizing that position. Do you add a third of your intended risk at a predefined level, and then wait to add the rest on a confirmation of a breakout? A strong trading system will outline these parameters for you, removing the gut feel, so to speak. Furthermore, a trading system will provide clear, predefined rules for what kinds of trades you should be taking, as well as how you will enter and exit those trades. Now, how rigid or loose those rules are comes down to personal preference and experience. The goal should be to remove as much of the guesswork as possible in order to start being consistent in our trading. Remember, consistency is key if we hope to exploit our edge within any given market. Now, I want to direct your attention to the last point. It's crucial that we trust our system after we've taken the time to craft it. Remember, from the first course, how losing streaks are inevitable? Well, that still applies to even the most robust of systems. The hallmark of a strong trading system is that it ultimately produces more profitable trades than losing trades. We have to be disciplined when we go through periods of drawdown. If we start giving up on our system after a few losses, we should blame our lack of discipline, not the system for failing us. Now that we know what a trading system is, let's move on and discuss the components. A trading system will include, but is not exclusively limited to, the following components: types of markets, time frames, risk, specific trade setups, entry triggers, exit triggers, and finally, trade management rules. Now let's break down these components and see exactly what we mean. Markets and time frame. A robust trading system will tell you which kinds of markets it will trade. Does it prefer range-bound markets, or does it perform better in a trending environment? Does the system trade volatile or non-volatile markets? If, for example, you employ a trending trailing stop exit strategy, your system may perform better in a less volatile market compared to a volatile one. Next, let's talk about time frame. A trading system should outline which time frame you will analyze and which time frame you will execute on. Are these two the same? Do you analyze a daily time frame for swing trades and then execute based on the 4-hour time frame? This will also include the expected duration of your trade. Are you taking scalps or day trades where you don't plan to hold longer than a few minutes or hours? Or are you building a position over several days or even weeks and can afford being underwater for a certain period of time? These are the types of questions your system should answer for you. Next, let's talk about risks and trade setup. A strong trading system will outline the maximum amount of risk each trade should warrant. This will be based on the number of confluences via indicators, or maybe it's left to the discretion of the trader. A trading system is very personal to each individual. While there are no right or wrong answers, fine-tuning your system to perform in its best conditions will certainly yield a better equity curve over the long run. Your system should also clearly state the total acceptable drawdown. This should be directly related to your win rate and the average R multiple of the trades you recorded in your trading journal. We'll get to journaling towards the end of this module. For now, I want to talk about trade setups. Is your system more technical or discretionary? Do you trade based on structures or indicators? A technical system may involve several indicators, while a discretionary system will rely more on market structures or visual cues. This leads me to my next two components, entry and exit triggers. A technical system may trigger long entries when price is above a certain moving average, and an oscillator gets above a certain threshold. On the other hand, a discretionary system may use market structure, as well as the LTE framework for discretionary entries based on price action. A trading system will outline which order types you use to enter and exit trades. Do you wait for the market to come to you and use limit orders? Or are you taking liquidity from the market with stops or market orders? Again, let your journal guide these decisions. Lastly, I want to talk about trade management. A robust trading system will tell you how involved you should be in your trades once you've actually entered the market with a position. Some technical systems do best with little to no manual interference, while more discretionary systems completely rely on the trader's intuition in order to emerge profitable. Your system should also tell you how to strategize that management. Are you compounding winners at certain confirmations, or do you average into an entry or exit based on other conditions? Depending on what style of trading your system adopts, these choices should be clearly defined and followed. Ultimately, a trading system is only as robust as the trader crafting it. It can, but does not need to incorporate all the components we talked about today. The devil is in the details. I found that the more explicit the system, the more consistent my trading becomes. As you get more comfortable and experienced, you can start adding in more and more discretion. But remember that at the end of the day, no matter what kind of system you craft, learn to trust and follow it to a T. Now, if it ends up losing more than your total acceptable drawdown, that will be a good cue that it needs some revamping or maybe reconstruction altogether. In the next lesson, we're going to look at how we go about implementing a trading system after we've crafted one. Thanks for watching, and I'll see you soon.